What I really want to do today is kind of set the table for you, and hopefully this ties in with a lot of the presentations that you hear. I work, as Patrick said, for a company called USAA. We're a 96-year-old startup. We were actually founded by 25 Army officers at Fort Sam Houston in San Antonio in 1922 that couldn't get insurance anywhere else, and so they decided to start their own insurance company. And for some reason at that time, people thought that that Army officers were a poor insurance risk. Well, it turns out, fortunately for me and for the 12 million members that we serve today, that insurance officers are a tremendous risk. So kind of give you a background of USAA and kind of what really feeds into what I want to talk to you guys about today, which is what I call the 7 deadly sins of insurance. Now, I'm an underwriter, so I'm not a marketer, so that was the best title I could come up with. But my role specifically at USAA is to write business in catastrophe-prone areas. Because of our mission to be the provider of choice for the military community and their families, we are reciprocal, kind of a mutual, not a for-stock company. We're owned by the military members and their families. Our mission is a little bit different. We're not necessarily looking to return value to shareholders, although we've obviously been very, very successful, very profitable. But it's really to serve as many members as we can. Now, certainly we have to make some trade-offs because there's risk involved, particularly in some of these catastrophe-prone areas, and we happen to have a concentration of risk, as you might imagine. So folks like Norfolk, Virginia, where we have the largest naval base in the world, the sea level is rising as the land is actually shrinking, so we've got a major issue with flooding. A hurricane certainly would be bad in that area. Certainly the California wildfires, particularly San Diego for us, is an area of high concentration. So we've got these kind of pockets of concentration. And a lot of people say we kind of have a smiley face distribution in the United States, so right along all the coasts, both coasts and through Texas. And then they also like to have a view of the mountains. So we have a lot of folks kind of in Colorado in the Front Range. And so they get hit with a lot of hail and severe thunderstorms. So in my role, trying to find ways to say yes to more and more members that live in these cat-prone areas, I have to deal with a lot of technology firms. And so there's been a lot of traditional players, but more and more kind of InsurTech startups that's going to help me in that mission. And so I've seen some good sales pitches. I've seen some really bad sales pitches when it comes to technology. And I can see the benefits of some technology, and other technology is really just bright, shiny objects. So that's kind of what I want to kind of navigate you through a little bit today. So, I call these fatal flaws or sins. These are the things, Patrick talked about, right? Lloyd's of London. Insurance really hasn't fundamentally changed in a lot of regards in 300 years. Maybe the last change was the advent of auto insurance 100 years ago when the automobile was invented.